Greetings to all the good people out there, and welcome to a special episode of the Market Color Podcast. The reason this is a special episode is because it has been requested by you, our listeners and subscribers, who wanted to know more about Treasury Bills and Bonds. And therefore, in response to your inquiries, I have decided to prepare this brief 10-minute presentation to shed some more light on this asset class. In this presentation, we're going to be looking at the following key areas. The first is on what are Treasury bills and bonds and why do governments issue them. The second thing we're going to be looking at are some of the key features and benefits of this asset class. At this point, we'll also be looking at infrastructure bonds. We'll then move on to look at who can invest in government securities. And finally, we wrap up the podcast by looking at the step-by-step process of how to invest in Treasury bills and bonds. And so, without further ado, this is your host, Jamuhuri, and together, let's dive right in. So what are Treasury bills and bonds? In a nutshell, they are government debt securities. That means they are debt instruments that are issued by the government to raise funds to facilitate government operations and programs. However, from the investor's perspective, they are an attractive investment opportunity that is backed by the full faith and credit of the issuing government. So why do governments issue Treasury bills and bonds? The reason the government issues Treasury bills and bonds is so as to raise funds to finance the budget. Therefore, by issuing Treasury bills and bonds, the government is actually borrowing money from the public. And consequently, whenever you invest in government securities, you are actually lending money to the government. As we mentioned just a bit earlier, Treasury bills and bonds are debt securities, and that is because they represent government borrowing from the public. So, what are some of the key features of these instruments? Treasury bills are a short-term investment. That means their duration is less than 1 year. And they are available in 3 tenors or durations. That is 91 days, 182 days, and 364 days. Treasury bills are issued on a weekly basis by the central bank, and the auction is held every Thursday. They are sold at a discount, which means that the investor buys the security at an amount that is slightly less than the face value, and that discount constitutes the interest amount. The minimum investment amount for Treasury bills is 100,000 shillings, and above that amount, investments must be in denominations of 50,000 shillings. On the other hand, Treasury bonds are a medium to long-term investment with a duration ranging from 2 years to as long as 30 years. The minimum investment amount for Treasury bonds is 50,000 shillings, and above that amount, investments must be in denominations of 50,000 shillings. Treasury bonds are issued on a monthly basis and are sold at a discount just like Treasury bills. However, unlike Treasury bills, bonds pay out a fixed amount of interest referred to as a coupon, and this is paid out every 6 months for the duration of the bond. Therefore, bonds provide a predictable source of fixed income over the long term, which is why they are also referred to as fixed income securities. So, what are some of the benefits of investing in these securities? Treasury bills and bonds are considered to be a secure investment because they are issued by the government and also because they are issued in the local currency, and therefore the risk of default is extremely low, which is why they are considered to be a risk free investment. However, in reality, they are not entirely risk free, and there have been cases in the past where governments have created hyperinflation and decimated their local currencies by printing too much money to pay off domestic bond holders. Case in point is the current situation in Ghana, where the local currency, the cedi, has so far this year depreciated about 60% versus the US dollar, and the Ghanaian government has now effected a mandatory swap of high interest bonds and replaced them with low interest bonds. So the point is this: yes, treasury bills and bonds are secure, but they are not entirely risk free. The other major benefit is that treasury bills and bonds offer a competitive rate of return, making them an attractive investment option for most investors. Currently, the rates on treasury bills are hovering around 9 to 10%, whilst the rates on treasury bonds are more dependent on the duration, but we have seen rates as high as 14%. The rates available on treasury bills and bonds are usually much higher than the rates offered by commercial banks for products such as savings accounts or even fixed deposit accounts, where rates can be as low as 2 to 3%. However, the key question about interest rates is whether you, as an investor, are receiving a real rate of return. And how you determine that is by subtracting the rate of inflation from the rate being offered on your investment. For example, as per the last auction, the 91-day Treasury bill came out at 9.32%, whilst the current rate of inflation in Kenya as at November 2022 is at 9.48%. Therefore, the real rate of return for an investment in the 91-day Treasury bill is negative 0.16%. In short, any investment producing a rate of return that is less than the current rate of inflation is in reality losing value over the long term. That is a basic rule of thumb that you want to adopt as an investor before you place your funds into any investment. Next up, we look at infrastructure bonds. The government, via the central bank, also occasionally issues what are called infrastructure bonds. As the name suggests, these are bonds that are issued to raise funding for infrastructure projects. Infrastructure bonds tend to be longer term in duration, ranging from about 6 years all the way to 15 years, and are normally amortized, which means that a portion of the principal, normally 50%, is repaid before maturity. These bonds always tend to attract a lot of investor attention, and that is because the interest earned on them is tax exempt. For your information, there is a 15% withholding tax on interest earned for treasury bills, as well as treasury bonds with a duration of less than 10 years. However, for treasury bonds with an initial duration of more than 10 years, the withholding tax is at 10%. So, a frequently asked question I get is, can I access my investment funds before maturity? And the answer is yes. However, it depends. For investors in treasury bonds, they can access their funds by selling their securities in the secondary market at the Nairobi Securities Exchange via an authorized broker. However, Treasury bills are not traded in the secondary market. Therefore, for investors in Treasury bills and some Treasury bonds which are not in demand in the secondary market, that means they are illiquid, the only other option is to rediscount these securities with the Central Bank of Kenya. However, rediscounting is highly discouraged, and that is why the central bank charges a punitive rate of 3% above the prevailing market yield. What that basically means is that you end up receiving less money than you initially invested. That is, you not only forfeit the interest, but you lose a small fraction of your initial investment. Therefore, investors are encouraged to highly consider their cash flow requirements before committing to an investment in either treasury bills or bonds. So, who can invest in this asset class? Well, basically, anyone above the age of 18 years can invest in treasury bills and bonds, from individuals to chamas, from Kenyans in the diaspora to foreign investors, as well as corporates and institutional investors. And you can invest either directly with the central bank by opening a CDS account, which we'll look at later, or you can invest indirectly as a nominee of a commercial or investment bank in Kenya. However, please note that the banks do charge a fee for this service. So, how do you go about investing in government securities? The following is a broad overview of the process on how to invest in treasury bills and bonds. Step number one, you need to open a CDS account. So, what is a CDS account? CDS stands for Central Depository for Securities and is the account that is opened to facilitate investments in government securities. Step number two, you need to complete and submit an application form to the Central Bank of Kenya. These application forms are available on the Central Bank website. After you submit your application and the auction is held, this brings us to step number three, where you need to confirm the results of the auction. Remember, you are participating in an auction and therefore it is not guaranteed that your application will be accepted, which is why you need to call the central bank to confirm two things. The first, if your bid was successful, and if it was, then you need to confirm the exact amount of money that you are required to pay for the investment. The results of the auctions are widely published and are also available on the central bank website. For your information, applications or bids for amounts below 20 million shillings, these are considered to be non-competitive bids. What that means is that applications below 20 million should not be submitted with a rate, as they are usually accepted at the weighted average rate for that particular auction. This then brings us to step number 4, which is making payment. The Treasury bill auction is held every week on Thursday, whilst the Treasury bond auctions are normally held on Wednesdays. And if your application is successful, you will then be required to effect payment before the deadline, which is by 2 p.m. on the following Monday. I want to emphasize that deadline again, which is by 2 p.m. on the Monday following the auction. For amounts below 1 million shillings, investors can submit their payments either through cash or banker's check. But for amounts above 1 million shillings, payments must be effected through an electronic funds transfer from your bank account to the central bank. Please note that successful applicants who fail to submit payments can be barred from participating in future auctions. Therefore, please ensure that your payment reaches the central bank on time. Now, for a detailed step-by-step process on how to open a CDS account and invest in Treasury bills and bonds, please visit the Central Bank of Kenya website, where you will find a detailed presentation on this entire process. And on that note, we come to the end of this special episode of the Market Color podcast. The aim of this presentation was to create a better understanding of Treasury bills and bonds, and also to enable those of you who wish to invest to be able to do so. I hope that this presentation has served that purpose. However, should you have any questions or require some more information, please feel free to reach me on the following email address, and that is jamuhuri@gmail.com. Jamuhuri spelled Jamuhuri. So until the next time, this has been your host, Jamuhuri, from the Market Color podcast, wishing you a profitable investment in Treasury bills and bonds. Thank you, and God bless.